Welcome back to QAV, TK. This is episode 608. We're recording on the 21st of February, 2023. It's a lovely Tuesday in Brisbane, a little bit grey in the skies, a little bit cooler than it has been of late. How's the weather down at Cape Shank, TK?
Lovely. No, the weather's great. It's cooled off a little bit. It's sunny now, a little bit windy, but yeah, just loving it at Cape Shank. It's low 20s and sunny.
Well, I wish I could say the same thing about the market, Tony. It's suffering from long COVID, I think. It's been a choppy week. Took a big hit this morning when the market opened. Has recovered a little bit since then. It closed yesterday around about 7,552, dropped down to 7,511 this morning, and then sort of has recovered to 7,554, still down from yesterday. I know in Australia in the last week, we've had a lot of rather disappointing earnings statements, results coming out from a range of companies. Market doesn't seem to be very happy with a lot of the earnings that are coming out. Some surprises in there that I know you might want to talk about a bit later.
Yeah, I think I haven't got the stats in front of me, but they do keep stats on how many companies beat their earnings. And even though it's more than half this reporting period, I think it's lower than what it normally is. So I forget the numbers now. Say 70% of companies normally beat their consensus estimates. It's now, less than that. So That's one of the things which I think is weighing heavily on the market. Some companies aren't giving outlooks, which is also weighing heavily on the market. Like if you've always given an outlook and you don't give one, the market thinks, well, you're expecting bad news, or you just don't know. It's too up in the air. The other thing I'll say is there's just been another horse sale in Sydney, and I've been offered lots of cheap horses to buy. And I was just speaking with one of the studs on the phone before we started recording, and he was saying that he feels the sales have dropped 20% just in the last month. So it's not a great indicator for where the economy's going usually.
Let's look at the portfolio updates. Dummy portfolio since inception, which for new listeners is the 2nd of September 2019. According to Navexa, up 15.7% CAGR per annum over that period, down from where we've been of late, which is more like 18% CAGR. And versus the benchmark, the STW, which is up 7.41% per annum over the same period of time. So we're still doing double market, even though we've come back a little bit. Got quite a few dividends that are sort of in the wings as well that'll kick in if we don't sell those stocks over the next sort of month or so. They go X. But FBU, your pulled pork last week, Tony, continued the trend of the pulled pork kibosh. It crashed through. It didn't crash through. It slid gently below its 3-point trend line sell this morning. We hold it in the light portfolio, and I haven't sold it yet today because it's just been hovering around its 3-point trend line sell marker, and it looks like it's going to come back over it, but then it doesn't. And I just thought at 11 o'clock this morning Sydney time, I thought, it was like 1 cent or 2 cents off it below, and I was like, I'll just hold on until I get back from Kung Fu. And I got back from Kung Fu and it was another cent down. I'm like, I'll just wait until I do the podcast and I'll see how it is at the close of business.
Yeah, I'll wait till tomorrow, see how it resolves. In my defense, I didn't select FBU. Someone requested it, so I'm just the mouthpiece. But it's my kibosh.
It is. It's when you talk about these things that you put the kibosh on them. So apologies to Fletcher's building group there for Tony crashing their share price. Monetary tightening in the US has apparently been sending Wall Street lower, according to the Fin Review, and ASX technology stocks have been affected by that? I don't really know why ASX tech stocks are affected by US monetary tightening. I assume it's got something to do with investment companies in the US that are investing in Australian stocks that are pulling their belts in or something. How are those two things connected, Tony?
Well, when they say monetary policy in the US, they're talking about interest rates. And so interest rates are still rising. I think I did speak last week about the fact that the market kind of gets ahead of itself and thinks that the interest rate rises are either coming to an end or potentially will be followed by interest rate cuts later on this year or early next year. And so that gets people excited again to invest in tech stocks and high growth stocks because they think interest rates coming down will improve their discounted cash flows for those companies and their valuations for those companies. And it's going to be free and easy money again, so you may as well take the risk. But the market keeps getting a bit of a dose of reality with all this stuff. And whatever happens in the US with the NASDAQ is going to impact on Australian tech stocks as well. So they're all...
But why?
A lot of these stocks are what they call relatively priced. So it's a bit like the housing market. We know what it costs to build a house, but the houses that we buy sell for a lot more than that, which is the land value, I guess. But how do you value the cost of the land? Because if you put a house on it and it gets a 3% yield, you wouldn't pay as much for it if you're just buying it for business reasons. So because you can get more than 3% yield in the bank by putting your money in the bank these days. So why would you just outlay a whole heap for a house and then rent it out for 3%? And what real estate agents will argue if you ask them to value your house is they'll go and pull up all the comparative sales in the market recently. This house down the street sold for this price, and this one's also got 3 bedrooms and it's the same size as yours on the same block of land in the same suburb. So there's a lot of relative pricing going on, and that's the same thing, particularly with tech stocks, because how do you value them? I mean, there's no assets, and all the profits are in the future. How long in the future? Who knows? So you value them on relative metrics. We've got this many customers versus this company in this tech stock in the States, which has this many customers, and therefore on a revenue per customer basis, it's worth X times. So that tends to be how they get valued.
Right. So it's just a little bit of fudgery-wudgery.
Yeah, look, and all this stuff, it's classic noise. Just don't listen to the short-term noise and what the market did yesterday and all that stuff. It's just so not important.
Yeah.
Really. I mean, there are big things afoot. I'm not saying that there aren't trends afoot that are going to, make it easier or harder for us to invest, like interest rates rising. But to look at what the market thinks interest rates are going to do today versus yesterday is just going to turn you in knots.
Well, that's the thing that always makes me scratch my head is the market seems to be buoyant one day and then depressed the next day. I'm like, well, really, what changed? Like, did somebody die overnight? What's so different today as of yesterday? It's not like you didn't know that the economy was tough or this was happening or that was happening. What's the big news that happened overnight that made you go from buoyant to depressed? And I can never work it out.
And that's Mr. Market, as Ben Graham said over 100 years ago, the manic depressive neighbour who comes to your house every day and offers you a different price for the same asset. Yeah. Nothing's changed. But what tends to drive the market, if you want an answer to those short-term gyrations, it tends to be whatever data set just gets released. So there are stats coming out all the time, particularly in the US, about arcane things like non-farm payrolls. How many steel workers are employed, all that kind of thing, and then economists will hyperventilate and extrapolate and blow a lot of hot air about what that means for the future of the civilized world, and the market will adjust, and it's really not that important.
Yeah. Well, on our buy list this week, we noted that iron ore is a buy again, but on the same day, there was a filthy article in Rear Window about Andrew Forrest, he's not the CEO, the executive chairman of Forrest Metals Group, written by
Fortescue
Joe
Metals Group.
Aston. Isn't that what I said?
No, you said Forrest Metals Group. He'd love it to be called Forrest Metals Group, I'm sure, but it's called Fortescue.
Fortescue Metals Group, my apologies. Written by Joe Aston in the Financial Review, entitled Andrew Forrest, Insane in the Membrane, where he was just basically talking about an earnings call that they had. Executive Chairman Andrew Forrest exhibits all the signs of a man hanging on to reality by a very thin thread. He began by assuring participants, I'll be gladly handing over to CEO Mark Hutchinson of FFI, the Fortescue Future Industries, and FMG CEO Fiona Hick, so you won't hear much from me, before completely dominating proceedings. His homespun over familiarity, the fake rapport, the simulated affection, the random and inappropriate love bombing of people was laid on thicker than ever. And then he goes on with some quotes, and it was much like the nanotube in Elizabeth Holmes' magical blood machines, the membrane will change the world. He was talking about some magical membrane that they've got. Apparently, Forrest said, talking about some breakthrough that they've made in Fortescue Future Industries, which will be able to produce sizable volumes of green metallics out of our own iron ore without producing CO2. Let me just say, Forrest teased, to give a clue to all our competitors out there, uses a membrane, and they're going to have to come and talk to us if they want to borrow the membrane. Aston writes, there you have it, ladies and gentlemen. Much like the nanotube in Elizabeth Holmes' magical blood machines, the membrane will change the world, though with that the case, the last thing you do is talk about it. I have the membrane just quietly, and I'm also flagging to my competitors that I have the membrane. The membrane is Forrest's secret sauce, like Hamish Douglas's downside protection TM. More likely, Forrest is insane in the membrane. What did you think of all of that, Tony?
Oh, well, first of all, it's alleged that all these things happen, so we've got to be careful about what we say. But Joe Aston is hugely entertaining, and oftentimes the only person that talks truth to power in the business press. So I think broadly he's basically saying that Andrew Forrest is a terrific salesperson, handling the media and handing out the love to all the people that are listening. And I think Joe Aston's kind of right when he says that, Twiggy Forrest has given some indication that they've discovered some sort of particle or process that can make iron ore greener, but he's not giving out many details at the moment, so you should be skeptical, and I think that's fair enough. Hopefully Twiggy Forrest has discovered some way of creating iron ore in a environmentally better process than what it's been done in the past. But like all these claims, we'll wait and see. Let's see it.
Aston's got a bunch of alleged quotes from Andrew Forrest during the call. These are quotes to journalists. He's written, all of you can contact me anytime you like. Look, I think you're an excellent journalist and they're great questions. Typically excellent question, mate. You're damn right. If you want to ride, mate, it'll be a great voyage. All these questions, they're showing a lot of vision. They're showing a lot of foresight. Great question, Lachlan. Look, excellent question, Melanie. Nick, great question, mate. You're overdue to shout me a beer. I read all that and I thought, sounds like a great bloke.
Yeah, a great salesperson, and he spent his whole career doing that. And to give him his due, I mean, like, he could be on the wrong train with the FFI, and he's been, trying to promote green hydrogen. I don't even know if that's going to work. So, and he's been going around the world signing up lots of second, third world countries to provide different things to them. And I suspect he's a bit like some of the Middle Eastern countries at the moment. He can see that iron ore is not going to forever be in a boom that it has been in. China's not forever going to expand and grow, which is basically where the iron ore has been going from Australia. And so he's diversifying away, just like, Saudi Arabia is trying to do away from oil. Same sort of process, whether it's green and who knows. He's certainly going that way, and it's whatever it is, it's in its infancy. He's seeing a long runway for these things, and he's got a history of seeing far into the future. I mean, he took on the might of BHP and Rio and became the third powerhouse in iron ore in Australia. And to put that in perspective, that's like starting a supermarket and taking huge market share away from Coles and Woolies, or starting a bank from scratch and taking on CommBank and NAB and Westpac and becoming a major force in the banking sector. It's these things that achievement is so rare in Australia, where we tend to have duopolies and oligopolies. That he has a lot of track record and a lot of credibility. So, apart from the fact that Joe Aston's pointing out that he's a good salesman and we should be skeptical about some of his claims, he may well be onto something, but who knows?
I love Joe Aston's conclusion. What he ultimately wants is for everyone to love him. Not everyone will love Andrew Forrest for being a very successful businessman who dug shit out of the ground and sold it to the Chinese to make steel. That will merely get him a who's who entry as another mercantilist. That's not what Twiggy wants. He wants statues. He wants global acclaim. He wants world peace. He wants the lot because he's effing mad. So he's ending slavery, saving the ocean, building happy abattoirs, being the king of Davos. There is no lane left for him to stay in. There is none because he is swerving all over the effing road. Is it any wonder Guy DeBell crashed his bike just to get the hell out of there, joining the others, tearing their hamstrings down the exit ramp?
Well, that's certainly true, and we've spoken about that in the past, that there's been some. I mean, the CFO resigned just before the results were announced, and Guy DeBell, who was a senior banker at the RBA, joined FFI and then quit soon afterwards. So there's something going on there. Joe Aston's right to point out.
So I guess my question is, iron ore's a buy again. FMG's on the buy list. It's right down the bottom this week, but it's on the buy list. Adding those two things together, plus Joe Aston's article, would you buy FMG?
I'm not gonna add Joe Aston's article into my considerations because it's his writing for entertainment. But I am cautious because of Guy DeBell's and the CFO's resignation. I think they're red flags.
Yeah.
So if it was my last dollar, maybe, but I'm hoping to find something on the buy list a bit higher up to buy first.
All right, let me move it along to Charlie Munger. Charlie Munger.
All hail Charlie Munger.
Oh, wow. Like this guy, super impressive. As I'm sure most people listening to this know, outside of Berkshire, Charlie also owns a big chunk of newspaper. Tony's pointing at his ears for some reason.
I've lost you. Your sound's gone.
Really? Well, I think it's your end, not mine, man. I think it's you, not me.
No, you're back.
Yeah.
Well, it could be.
I just got a message saying my internet connection is unstable.
Right.
Hold on.
Sorry, Twiggy.
Getting 110 megs here. I don't know what Twiggy did. Okay. So I was saying, as most people listening to this probably know, Charlie Munger not only has a big stake and is one of the co-whatevers of Berkshire Hathaway. He also owns a big chunk of a newspaper called Daily Journal, which has been transitioning from being a newspaper to a technology company. And he with the interim CEO of Daily Journal, did the sort of live Q&A for their annual general meeting this week. And Charlie, as always, is being interviewed by Becky Quick from CNN. She's passing through the questions, facilitating it. Charlie is 99 years old, and he looks it, but he is so sharp when he's answering these questions. I've only watched about, 30, 40 minutes of it so far, but I just want to play a little bit of it. There was a question preceding the one I'm about to play where he was asked what he thought about AI and ChatGPT, and he gave a fairly cautious response. I'm thinking, like, okay, what are you going to ask a 99-year-old guy about AI for? But he said, look, I think there's a lot of possibilities for AI. I think it's got a big future ahead of it. He said he doesn't think that it's really something to worry about right now. He talks about how the technology business destroyed the newspaper business, the Daily Journal's business, and they've had to pivot, and it's a long, hard slog. But then the interim CEO of Daily Journal piped up and said he actually thinks that ChatGPT and tools like that are going to have a huge impact on journalism, and they've already been using it in their newspaper and experimenting with how to use it to write articles and things like that, which is interesting. But then the next question Becky came up with was apparently written by ChatGPT. Somebody submitted a question that they used ChatGPT to write, and it's about sort of cognitive biases. So let me see if I can make the technology work here, and I'll play the question and Charlie's answer.
In your experience, what's the most challenging bias to overcome, and how do you personally guard against it? So I'd ask your answer to that question, and then what you think of the question that ChatGPT wrote for you.
Well, if I had to name one factor that dominates human bad decisions, it would be what I call denial. If the truth is unpleasant enough, people their mind plays tricks on them, and they think it isn't really happening. And of course, that causes enormous destruction of business, where people go on throwing money into the way they used to do things, even though it isn't going to work at all well in the way the world is now, having changed. And if you want an example of how denial is affecting things, take the world of investment management. How many managers are going to beat the indexes, all costs considered? I would say maybe 5% can consistently beat the averages. Everybody else is living in a state of extreme denial. They're used to charging big fees and so forth for stuff that isn't doing their clients any good. It's a deep moral depravity. If some widow comes to you with $500,000 and you charge her 1 point a year you could put her in the indexes, but you need the 1 point. And so people just charge some widow, a considerable fee for worthless advice. And the whole profession is full of that kind of denial. It's everywhere. So I had to say, and I always quote Demosthenes. It's a long time ago, Demosthenes. That's more than 2,000 years ago. And he said, what people wish is what they believe. Think of how much of that goes on. And so of course it's hugely important. And you can just see it. I would say the agency costs in money management, there's just so many billions, it's uncountable. And nobody can face it. Who wants to keep your kids in school? You need the fees, you need the brokerage commissions, you need this or that. So you do what's good for you and bad for them. Now, I don't think Berkshire does that. And I don't think Garen and I did it at the Daily Journal. Garen and I never took a dime in salary or director's fees or anything. And if I have business I talk on my phone or use my car, I don't charge it to the Daily Journal. That's unheard of. It shouldn't be unheard of. And it goes on in Berkshire, it goes on in the Daily Journal. But we have an incentive plan now in this Journal Technologies. And it has $1 million worth of Daily Journal stock. That did not come from the company issuing those shares. I gave those shares to the company to use in compensating the employees. And I learned that trick, so to speak, from the guy at BYD, which is one of the securities we hold in our securities portfolio. And BYD at one time in its history, the founder chairman, he didn't use the company's stock to reward the executives. He used his own stock. It was a big reward too. Well, last year, what happened? BYD last year made more than $2 billion after taxes in the auto business in China. Who in the hell makes $2 billion? It was a brand new entrant really in the auto business for all practical purposes. It's incredible what's happened. And so there is some of this old-fashioned capitalist virtue left in the Daily Journal, and there's some left in Berkshire Hathaway, and there's some left in BYD. But most places, everybody's trying to take what they need and just rationalizing whether it's deserved or not.
So that's a small taste of Charlie at 99. Isn't he great? Oh,
He is
wow.
good. You know, we should reach out to Charlie and try and get him on the podcast for an interview. That'd be fantastic.
Well, you're going to be over there in a month. I'll try and line it up.
It's brilliant. I mean, apart from the fact that he's 99 and still going strong, he's just as clear as a bell, and just thinking so clearly about everything, isn't he? Just pointing out where all the problems are in the industry and in capitalism and in businesses, listed businesses generally. It's just incredible.
Quoting Demosthenes.
Yeah. Yeah. I mean, his breadth and depth of knowledge is just incredible. And he's very rarely wrong. I can't think of a time when I've thought that Charlie was wrong or that he came out and apologized for making a mistake. If he says 5% of fund managers beat the market, that's probably about the right number. And if he thinks that they're overcharging him fees, then they probably are.
Demosthenes, on the other hand, was very wrong.
Why is that?
Oh, he roused Athens to fight against Philip of Macedon and Philip's son Alexander the Great. I'm pretty sure that they could beat these puny Macedonians, and Athens got crushed and it stayed under the heel of the Macedonians then for a couple of hundred years until the Romans took over and crushed the Macedonians. So anyway, yeah, Demosthenes was a bit of a madman.
When we get Charlie on for an interview, you can talk ancient Greek history with him.
I will. We'll talk about Demosthenes. Listen, my last point for the news section this week is I've been building this Gurufocus checklist, predominantly for our American subscribers, but I've been testing it against Australian stocks and comparing it to the Stock Doctor checklist. Now, two things I've discovered through this process. Number one, I'm not as good at Excel as I thought I was. Number two, actually, ChatGPT has helped me a lot in solving Excel formula problems.
Wow.
I just throw a formula into ChatGPT and go, "Can you fix this?" And it goes, "Yes, I can." And it tells me how to fix it. It's fantastic.
Wow.
It works more often than it doesn't work. Thirdly, what I've picked up is there has been some discrepancies between Gurufocus's data and Stock Doctor's data. And in the couple of instances that I've come through, and I've only looked at a couple of stocks this week, and there was problems in both of them. It turns out it was Stock Doctor, I'm pretty sure, that had the data problem.
Okay.
Just in case anyone's interested in these particular stocks, one is IMA, which has been at the top of our buy list forever. Stock Doctor is showing a 90% reduction in its market cap starting 2022, which the ASX and IMA's own website doesn't show.
Right.
And Gurufocus didn't have. They went from like, I don't know, I think it was like 150 million shares on issue down to like 12 million shares on issue, which is going to have an impact on its score in our buy list, right? If it's, when we're looking at things like equity per share and stuff like that. So I flagged that with Stock Doctor, Victor Di Pasquale, and he's looking into that. And the other one I picked up is N1H, which is also up at the top of our buy list. Stock Doctor shows a drop in their shares on issue from 86.5 million down to 25 million, but the ASX has them at 88 million, as does Gurufocus. So I think
Wow.
Stock Doctor's got some data integrity issues. I might be wrong. I'll wait till Victor comes back to me, but that
Well, I had
may
that.
change
I
some
had
things.
I had a similar problem last year. Remember, I bought News Corp because it came onto the buy list and it turned out they had the wrong number of shares in Stock Doctor. So, look, they're not immune. I imagine there are errors in Gurufocus too. I'm not that familiar with it, but yeah, if something looks strange, it's worth checking out. Were there any share consolidations or buybacks for those two stocks you mentioned?
Not that I could see. I went through the announcements on Stock Doctor, and again,
Okay.
I looked at the ASX and I looked at AMA's website. I don't think I looked at M1H's. I just took the ASX number, but yeah,
Okay.
Gurufocus tends to agree with the ASX on both of those, and Stock Doctor's in disagreement. So,
Wow. Okay.
mhm.
Yeah, well, that's not good. Hopefully Stock Doctor can fix it.